Valens Research, Uniform Financial Analytics.
EBS has been in the news a lot lately. EBS has obviously been in the news a lot lately. Why? Because the fact that they make the J&J, they also make the AstraZeneca parts of those vaccines, and they had issues with quality, right? And so you think about that, and okay, that'd be a concern, especially because on an as reported basis, you would see this company and you'd say, wow, coming into the pandemic and going forward, they are not just a low return business, they're a low declining return business. So you'd say, yeah, the pandemic might make them have a short-term boost in profitability because of the fact there's so much demand for their stuff once they figure out their quality issues. But it's not going to be a compelling thing for them for a long time because returns are declining and it's not a great business. What we can see though, when we look at the uniform accounting data, is we can see that even before the pandemic hit, this company was starting to see returns accelerate and demand accelerate for the company, thanks to what they do as a contract manufacturer for all sorts of areas of the urgent areas of the healthcare space. And so we can see is actually returns were down from 8% to 4% the last few years. They were up from 6% to 15%. Right. This is a company that didn't see returns get cut by half. It saw returns more than double over the last couple of years. And that's before they had the phenomenal tailwinds that they're going to have for the next foreseeable future based on vaccine production, right? Once they sort out the quality issues. So that's what's so interesting here is you look at this and you can say, well, the market's basically pricing returns to be in a normal environment. Well, in reality, we might see returns a lot higher for a lot longer, and we can be confident that that could be persistent because we can see the return trends were already improving before we even got to the pandemic. And right, when you got a company that's trading at right a 10 times multiple and trading at valuations that really expect this kind of decline for returns to fall from what are forecast to be 24% in 2021 to 11%. Hey, worst case scenario, the market might be right. But in reality, the market might be really undervaluing this company's cycle, and we can only see that because we're looking at the real uniform accounting data.
Valens Research, the world's leading source for uniform financial analytics.